10 a.m. in Lagos, Nigeria. It's a Friday. Welcome to Business Morning. Let's do Friday business. I'm Ini John Mekwa. Well, let's start off now with global oil prices. Brent oil prices rose in Asian trading on Friday as markets assessed the prospects of economic stimulus in China after weak economic data, falling inventories in the United States, and supply cuts from key producers. Brent futures rose 68 cents to $80.32 a barrel, while U.S. West Texas Intermediate crude climbed 65 cents to $76.30 a barrel. Prices closed marginally higher on Thursday. Brent was on track to close up 0.6% for the week, while WTI was set to tick up 1.2%, which would represent a fourth consecutive week of gains for both benchmarks. China's weak economic figures had kept a lid on prices through the week. The world's second biggest oil consumer this week posted disappointing growth in second quarter gross domestic product, increasing the likelihood of the economies missing the government's 5% annual growth target. On Wednesday, Beijing announced that it will formulate plans to stabilize growth in 10 sectors, as well as increase support for private firms. Supporting prices, recent data, including lower than expected inflation and moderating job growth, have convinced many investors and analysts that the Federal Reserve's expected July rate hike will be the last of its current tightening cycle. A worrying development for Nigeria and a whole lot of countries who like rice, or rice is a staple food, as prices are set to climb further after India export banned and trade is at standstill. Asian rice trade paused on Friday to digest the previous day's ban by India, by far the world's biggest supplier of a major share of its exports of the staple, with prices expected to climb substantially in the coming days. India, which accounts for 40% of world rice exports, on Thursday ordered a halt to its largest rice export category to reduce domestic prices, which have climbed to multi-year highs in recent weeks as erratic weather threatens production. Traders say that rice prices are going to go up further in the export markets as they expect a minimum gain of around $50 a metric ton, and it could be $100 or even more. Meanwhile, sellers as well as buyers are waiting to see how much the prices of rice will go. Another hot commodity is wheat. Chicago wheat futures rose on Friday and were poised for their biggest weekly gain in more than 16 months as Russian attacks on Ukrainian ports raised worries over global supply. Corn fell while soybeans were largely unchanged. Both markets were on track for weekly gains on outlooks for hot and dry weather in key growing areas of the United States Midwest. The most active wheat contract on the Chicago Board of Trade was up 0.5% to $7.30 for 3/4 of a bushel. Corn fell 0.4% to $5.44 for 1/4 of a bushel, and soybeans added 1/4 of a cent to $14.05 a bushel. For the week, wheat has climbed 10.5% and is poised for its biggest weekly gain since March 2022. Corn has also added almost 6% and soybeans 2.5%. Renewed concerns over supplies from the Black Sea region underpin wheat prices. Ukraine's defense ministry had said that it would consider all ships traveling to Russian ports and Ukrainian ports on the Black Sea that are occupied by Moscow as potential carriers of military cargo from July the 21st, and that's today. The announcement is in response to Kremlin also saying that ships leading to Ukraine's Black Sea port could be considered as military targets. Not a good one for the world at all. The two major suppliers of grain to the world now at their throats, especially at the busiest port, which is the Black Sea. Well, let's come back to Nigeria now. Good news, one way, or maybe the other way, you're paying more. The Federal Inland Revenue Service announced a total tax revenue collection of 5.5 trillion naira for half year. That's January to June 2023. And this is the highest tax revenue collection ever recorded by the service in any first 6 months of a fiscal year. Mr. Muhammad Nami, the executive chairman of FIRS, stated this while presenting the 2023-2024 tax revenue outlook to the National Economic Council at a meeting that was held yesterday at the villa, the presidential villa in Abuja. The presentation, which contained FIRS 2023 half-year collection report, showed that the FIRS achieved over 100% on its target for the first half of the year when compared to mid-year target of 5.3 trillion naira. So there, has the tax net been expanded, or are you just paying more? Well, we hope to dwell on this in the coming days to find out. And of course, the question you will ask is this 5.5 trillion naira, what is it going to be used for? How is it going to come back to me as a taxpayer? But I will talk on this some of the episodes of Business Morning. But there's also the issue of the cost of governance. Obviously, if you live in Nigeria, you're paying more for petrol. Doesn't matter the state you're at. And the President Bola Tinubu, has said that this is one of the prices that Nigerians will pay today for a better tomorrow. But Nigerians are asking, what price is the government or governors or members of the public sector, what prices are they paying as they're asking Nigerians to pay? That's captured in this next reports.
The cost of governance in Nigeria has been identified as a major limiting factor to national development.
No person will prescribe that.
It's why experts across sectors at this forum, organized by the Nigerian Institute of Social and Economic Research, NISA, in Ibadan, the Oyo State capital, are unanimous in their position over its impact on national budget, making growth difficult. They argue that political office holders must show selflessness for national advancement. NISA and others x-ray the layers of avoidable spending by public officials.
When we talk about cost of governance, we are looking at the bad side of it. We are looking at the misuse of public funds, questionable foreign travels, focused security votes.
In this country today, we have refineries. When we look at refineries, our refineries have not been serving us in this country for well over 10 years. But in those refineries, we have group GNT, we have MT. Do you know that they go for training?
I think this first one.
The Director General of the Institute believes the high cost of governance has stifled the well-being of the average Nigerian, while the Budget Office of the Federation says recommendations at the forum will be considered.
I have asked you, my compatriots, to sacrifice a little more for the survival of our country.
President Bola Tinubu urging Nigerians to make sacrifices and endure the hardship in the country owing to the removal of fuel subsidy. A viral video of what appears to be a public officer's convoy went viral on social media, stirring criticism across all spheres of the Nigerian society on the need to cut the cost of governance. Fast forward to this tweet from Senator Gbenga Daniel, revealing to the nation and the world his decision to suspend his pension and other benefits accrued to him as a former governor of Ogun State. According to him, this is because of his conscience, moral principle, and ethical code against double emoluments. However, this generated reactions.
Looking at what it has generated, it clearly goes to show that people are not happy with public, figures any longer. People are skeptical that they will not do the right thing. And I think it's time we start to lay good examples. If we want a better society where value system is the order of the day, we must make sure that even in little things, we set good examples so that others can fall in line.
What he said by the letter he wrote to the Ogun State government was to suspend the payment. not to completely stop the payment. Even if he has done that, then there remains other governors and deputy governors who are still enjoying this benefit also, still amounts to millions of naira on the scarce resources of the state. So while the actions appears to be a right step in the right direction, the best thing, and what would really benefit the people of that state, is to stop the payment of pensions to him completely and to repeal those laws that is by the members of the House of Assembly of Ogun State.
SERAP indicates that 22 states have passed life pension laws for ex-governors and their deputies, providing over 200 million naira. Of these 22 former state governors, 14 of them are serving senators in the 10th National Assembly. In 2019, a high court in Lagos ruled that the federal government should recover pensions collected by ex-governors serving as ministers and members of the National Assembly.
They are in contempt, except that they will argue that they were not parties to that particular decision. But this is public law. This is constitutional law. The court has established the principle. And that principle has not been set aside by a superior court, maybe a court of appeal or the Supreme Court. So that judgment is substantive, valid, and binding. So any governor who continues to act in contravention, any former governor, now a sitting senator or a member of the House of Representatives, who combines his remuneration as a senator without his remuneration as a former governor. I mean, they're in contravention of that judgment. They're in disobedience of that judgment of court. They are liable, to be cited for contempt of court.
The issue of ex-Nigerian governors and deputy governors' pensions and their allowances has continued to raise concerns among citizens. According to the World Bank, 96.3% of the country's revenue was spent servicing debts in 2022, which indicates that the country's expenditure is higher than revenue. Thus, the need to cut the cost of governance and redirect resources towards meeting essential needs of the populace. Although terminating or at least reducing ex-governors' pensions has become crucial to alleviate the financial strains in the states, a civil society organization proffers more ways to cut cost of governance.
Cost of governance for me should go beyond talking about how much you pay in salaries and wages for public officers. The cost of governance should include the cost of implementing capital projects, which is related to procurement. So we should begin to introduce more transparency and accountability in the public procurement process.
In 2021, Lagos State amended its 2007 pension laws for former governors and other political office holders, reducing their benefits and emoluments by 50%. Some of these entitlements before the amendment include 6 new cars every 3 years, a house in Lagos and Abuja, free medical care for the ex-governor and family, 100% annual basic salaries of incumbent governor, 10% annual basic salary for domestic staff, amongst others. Well, President Bola Tinubu is a former governor of Lagos State. As Nigerians are called upon to make sacrifices, public officials are also urged to be seen making these sacrifices and leading from the front.
Talking about leading from the front there, and I guess who else to lead but the president? As a former governor of Lagos State, it would be nice to know if he is still receiving some of those entitlement pension and house and cars and all of that. And remember that the wife of the president had told us, well, they are coming to serve because, I mean, they're not broke in any way, both of them, So, but obviously this is an ongoing conversation, especially as Nigerians continue to feel the squeeze from, the policies, unification of the FX rate, subsidy removal and what it's doing to transportation and food prices. It would be nice to also see the sacrifices or the squeeze felt by public office holders. Well, talking about some of those policies, yesterday we saw, or for 2 days now, we saw a lot of movement in the currency market. We saw the Naira drop to as much as 860. We saw it go back to about 797.60. And we've tried to understand why this sudden movement. Is there new demands for the dollar in Nigeria? Let's talk to Kelvin Emmanuel. He's always good with the numbers and data, background number. That's why we have him on the show now, joining us from our Abuja studio. Thank you so much for your time, Kelvin. What's going on? What are you guys doing to the Naira?
Good morning. Thank you so much, Ini, for having me. Well, you know, when you look at the FX markets in Nigeria, by the way, floating the Naira, unifying it was a good decision, and I commend the president for it. Also, the fact that the central bank has come up to, you know, create like a non-exchange, non-deliverable forwards market to become a market maker for forward contracts is also admirable. I'm aware also that the Central Bank of Nigeria has cleared FX backlogs up until the end of the first quarter in 2023 for Form A, dividend capital remittances, and matured letters of credit. They're still outstanding. And for example, the airline balance, because, you know, Nigeria has $818 million of about $2.3 billion globally of trapped airline funds. You know, the airline is one of the categories of capital remittances that are stuck in Nigeria. So basically, there are short-term solutions and there are long-term solutions in it. And I say to Nigerians that it's too early for us to judge whether the unification of the Naira was a good decision or not. In my opinion, it was a good decision. And the short-term solutions to the problem is liquidity. Now, take, for example, the fact that the NEC had a meeting yesterday and they declared that 1.9 trillion Naira was actually realized and is going to be shared amongst the federating units. FIRS came out and said they generated 5.5 trillion. I'll let you know this. Nigeria should not expect that next month. And I'll tell you why. For example, the NLNG that Nigeria owns 49% of, the Nigerian government, through NNPC. NNPC holds the 49% shares that the government owns in NLNG. Actually paid its annual dividend to NNPC of $1.1 billion, which was retained. And then it paid $699.3 million to the FIRS. Then it paid in corporate income tax. Then it paid $256 million in withholding tax. Now, historically, if you look at it over the last 23 and a half years, NLNG has generated a total revenues of about $131 billion. It has paid a total of about $28.6 billion to the Nigerian government over the last 23 and a half years, right? The highest revenues it generated in a single year was about $11.6 billion, which was in 2012. This year, it did about $8.8 billion, even if it had issues and it couldn't meet up with 22 million metric tons. So short term, the government-owned enterprises on the balance sheet of the federal government of Nigeria is supposed to provide FX liquidity for the Central Bank of Nigeria to be able to supply the market, right? But how much of liquidity is it providing? Because traditionally, the government is not supposed to spend the dividends. The government is supposed to keep the dividends NLNG pays as retained earnings for new capital investments in FID for next year. Maybe he wants to do like complete funding for Train 7, or he wants to do Train 8 or Train 9 to increase the capacity. Because current capacity of NLNG, for example, is 22 million metric tons per annum. Obasanjo, between 1999 and 2006, built that entire 6 trains, and since then we've not had any. Train 7 has been in development for 2 to 3 years, but we've not seen it. Now, that is supposed to be a short-term solution, but we don't have enough liquidity from that to settle the outstanding FX we have from A requests, for capital and dividend remittances, for matured letters of credit. So what are the alternatives in it? There's what they call foreign exchange support that central banks use. In 2008, when you had the global financial crisis, the likes of the Swiss National Bank, the European Central Bank, the Bank of England, the Bank of Japan, they did what they call foreign exchange support with the US Federal Reserve that issues the dollar, because they were having liquidity issues for US dollar for banks in these countries and in these regions. And under that, there are 3 ways through which a central bank can fund outstanding, right, and create liquidity in the FX market. It can fund it through borrowing from banks, which are FX swaps. It can fund it through drawing on your federal and foreign reserves. It can fund it through what they call terms of auction, right? Now, I'll tell you what, in central banking, there's what they call the Guidot reserve ratio to debt, which says that your foreign reserves should not be lower than your external debt. Nigeria's foreign reserves is $36 billion. Nigeria's external reserve is $43 billion. Yeah? The Central Bank of Nigeria can go to the US Federal Reserve and do either FX swaps, FX swap if it has credits with the US government in either US treasuries or deposits, or you can do terms of auction, collateralized lending. And I'll give you an example. Last year, Zainab Ahmed, I like giving this example because Zainab Ahmed last year signed a contract with the International Development Association of the World Bank to borrow $800 million for palliatives. An interesting thing was that she staked 17.1% of Nigeria's SDR units, special drawing rights at the IMF. Nigeria has about 3.3 billion SDR units at the IMF, and which is worth about $4.5 to $4.6 billion. So if you need collateral to do collateralized lending at terms of auction that the US Federal Reserve offers to foreign central banks as foreign exchange support to provide liquidity for your own FX market, why don't you use your special drawing rights at the IMF? This is a short-term solution that the Central Bank of Nigeria can use to bridge the gap we have for outstanding or backlog in FX that companies in Nigeria need for capital and dividend remittances for matured letters of credit. That's how you calm the market, because in a unified exchange rate market, the exchange rate moves based on demand and supply. If demand is higher than supply, the currency is going to weaken. If supply is higher than demand, the currency is going to strengthen. That's the principle. Now, the question that we have to ask ourselves on the long run as Nigerians, and the government needs to ask itself critically when it sits down to discuss and plan, is do we want a weak exchange rate or do we want a strong exchange rate? Countries adopt weak exchange rates when their exports are higher than their imports and their balance of trade is surplus. They adopt a strong exchange rate when their imports are higher than their exports and their balance of trade is in deficit. Nigeria has a situation where it exports more raw materials and imports finished products. So when you look at that balance, it doesn't favor a weak exchange rate. So on the short term, in order to solve and address liquidity issues and stabilize the market, especially when you consider the impact of the exchange rate on the price of fuel, because at the current exchange rate, it costs you about 565 Naira to deliver on flat pricing, to deliver 1 liter of PMS to Nigeria, plus the 27% of handling costs for landing PMS in Nigeria. And considering that Dangote refinery is yet to begin refining, and when he begins refining, it's going to cost him somewhere around 480 to 490 Naira to produce 1 liter of PMS, right? It's important that the central bank looks at it and say, why are foreign direct investors not bringing in funds immediately to raise the FDI volumes in Nigeria to create liquidity to stabilize the market? Number one, there's an outstanding backlog. That's why they're not bringing it in. For you to stabilize the market, you need to, look at international precedent and, create some kind of liquidity from collateralized lending from the US Federal Reserve.
All right, Kelvin. Sounds like we have a long way to go, unfortunately, and everything is related. From liquidity to policy to, loans and collateral, SDR and all of that. But it's our country. This is our country, so we'll stay on the matters. But thank you so much for your time, Kelvin Emmanuel, financial analyst, always there with the data and sharing it with us. Thanks a lot and enjoy your weekend.
Thank you, and you too.
All right, now let's take a breather. When we come back, another very serious issue, a threat from Poultry Association of Nigeria that from next month, they may shut down. Let's find out why and if there's a way to avoid it. You're welcome back. We go back to our Abuja studio now, where the Director General of Poultry Association of Nigeria, Mr. Onalu Akpa, joins us to tell us what's going on and why we're so threatened about next month. Mr. Akpa, thank you so much. Even though it's not a very good time, not just for poultry farmers, I must say, it's also for every Nigerian, almost every Nigerian. But you're threatening to shut down from next month. Why?
Okay, maybe let me repeat again.
Okay, Thank you. I was asking why the poultry farmers are threatening to shut down. I mean, every Nigerian, every sector is facing challenges at this time. So why do you want to shut down? Can't we brace through it as other sectors are doing?
Thank you, my sister. It's not that we don't persevere. It is not an intentional act to shut down the poultry industry in Nigeria. But before I go into explaining why it is not intentional, but let me put it right, that the poultry sector is a private sector driven businesses. So 100% all the investment in the poultry sector is driven by private persons' investment. So I will also tell you that nobody wants to put in this money and then in the middle of the road he will shut down that he doesn't want to continue the business. So it is the exigency of the time that is threatening the shutdown of the poultry industry. It is not that poultry farmers want to shut down the industry. It is because of the challenge of sourcing maize and getting maize at affordable prices that will make the farmers break through or even survive in poultry production. That is why it is being said that except something urgently is done, like an intervention by government to release substantial quantity of maize to the industry at discounted price, the industry may shut down because we can't expect maize to fall down as a manna. Neither can we also say we can source maize from any other place other than government assisting us with what they have in their reserve.
Well, the president has already made that announcement when he declared a state of emergency on food security. He also gave the order that grain should be released from the national silos for, farmers. Isn't that enough, or isn't that getting to you?
Yeah, but let me also say this. I want to appreciate the government by promptly coming up to declare a state of emergency on food security in this country. Government actually have also directed that maize should be released to the poultry industry, to Nigerians, especially to cushion the food security situation of the country. But what we are saying is this. We want a deliberate attempt to actually look at the poultry needs, the poultry industry need of maize in this country. And I'll quickly put it on record that the poultry industry alone need almost 4.4 to 4.5 million metric tons of maize out of the national maize production per annum. So, and I also want to put it on record quickly that, when you have birds in this country, every day the birds clamor to eat food. And you cannot wait until something is manna falls from heaven. So what we are saying is that if it is the enormous responsibility of a farmer to feed his bird on daily basis for their birds to produce eggs. Now, what it means invariably, it means that on daily basis you need a lot of maize for the almost 90 million layers we have in this country, and then over 170 million broilers to feed them on daily basis. That is what we are saying. And if that does not come up immediately and we wait for the bureaucracy, then the industry may shut down, because you can't tell the birds that I can't get maize to feed you today, and then tomorrow the same thing. Automatically, what you've invested over the time, we are automatically losing them. And that is why you see us talking on different platforms that, look, there is the need for urgent intervention in the poultry industry.
So when you say intervention, you say what the president said. I mean, it's laudable, but it's not enough. What for you would be a realistic, also considering that there are other sectors, that require attention, what would be realistic steps to intervening in this situation, to stop this shutdown that you're threatening?
Well, it is not a threat, and I just want to put it. We are coming up with facts of the situation on ground. And the facts on the situation on ground is now saying that if I cannot feed my birds today, I cannot feed my birds tomorrow, and I cannot feed my birds next tomorrow, invariably, what you start having is we are going to have a complete decline in productivity, and eventually it will lead to death and mortality of those birds. And I will tell you right away that a lot of farms are already shutting down because they can't afford the high cost of feed. And I'll tell you that for today, a 25 kilogram of a super layer mash, just 25 kilogram, is going as much as 10,500. And when you divide 10,500 by 25 kilogram, you are having a kilogram of feed around 410 to 425 naira per kilogram. So a lot of farmers are not being able to be in business sustainably. And when those that are still there are managing to survive, because you can't kill the birds, you can't drown them, and you can't just abandon them because it's your lifetime investment. And that is what we are saying. The government has done much. They've been intervening by giving the association maize, and we are so astonished that in the last 6-7 weeks, we were given some quantity of maize by the Central Bank of Nigeria and the Nigerian Commodity Exchange. But within 2 weeks, before we could collate the requirement and the requirement of our various states and stakeholders, that allocation was withdrawn. So while we are crying is that we are not crying because we want only to be heard. We are crying because we stand to provide the cheapest source of protein to Nigerians. We produce eggs, no matter how eggs is expensive now, it is one of the most cheapest source of protein. We produce chicken. And if we don't appeal to government to come in quickly to exactly resuscitate maybe the 40,000 allocation being, 40,000 metric tons of allocation being given to the poultry industry, already withdrawn, we may stand to not be able to produce chicken and egg for Nigerians.
In essence, Mr. Akwa,
not done,
in
and
essence,
continue to close down on daily basis. That means Nigeria will become once more a dumping ground for all kinds of chicken and egg from other parts of the world.
In essence, Mr. Akwa, what you're talking about, or what you think is the problem at this time, is the bureaucracy. It seems that's what I'm hearing from you.
Can I understand you once again?
Are you talking about the bureaucracy? Because you said those grains were allocated to you before you could get through the requirement, it was withdrawn. So is it the bureaucracy in acquiring some of this release from the government? Is that the problem at this time?
No, let me also let you know, the government has quickly come in to say release maize. Our appeal now to government is that direct the central bank or the releasing authority to resuscitate the allocation earlier withdrawn from the poultry industry so that we can stand to distribute this maize to our various producers across the length and breadth of Nigeria. That is simply what we are looking for. The government has done much, declaring a state of emergency, costs across on food security, costs across all sectors of the economy. But we are saying that the poultry industry that employs 25 million Nigerians directly and indirectly, and then also contributes over 25% of the aggregate gross domestic product of this country, need to be assisted. We are not saying give us maize at discounted prices, because today we can't source maize from anywhere, we can't go anywhere, and you can't tell these birds that you are displaying that I can't get maize to feed you. And if you don't feed them, they're not like human beings that can manage any other thing. Then they will start dying, and that will be a loss to the industry. So it is not a matter of bureaucracy. If you give us maize, what we need to do is that we have the association is so decentralized in the 36 states of the Federation plus Abuja. So if you get us maize, we have to contact all our state chapters to get us the requirement of all the farms under them. And the moment we do that, then we start distributing this maize. But before we could do that, the maize allocation was withdrawn. And I'm happy you are showing it now on the screen. You see, the poultry industry has been so bedeviled by the lot of challenges in the last few years, from COVID to NSAS, to the currency redesign, which caused a lot of eggs to be buried, like you are showing. And if I tell you, in this country with almost 90 million layers in production, with 70% of them in production, you have 66.5 million eggs being produced on daily basis. When you translate that into a month, it gives you almost 1.9 billion eggs. And if we were unable to sell just only 20% of these eggs during the period of the currency swap, then automatically it was a loss. And you see every farmer burying eggs, and in burying eggs, you cannot tell the birds that I'm burying your eggs and I'm unable to feed you. So the industry has been encountering a lot of losses, and another one has come. So we are appealing to government.
Because we're out of time. Mr. Akwa, we're out of time. But I mean, a colleague said I should ask this. When we saw the video of you burying eggs, why don't you sell it at cheap rates for people, for consumers, instead of burying them?
Let me also tell you the quantity of it. You see, if you produce 66 or 65.5 million eggs on daily basis, it takes you logistics, it takes you additional costs to start going. Apart from those that are being buried, a lot of eggs were donated to schools, a lot of eggs were donated to the hospitals, a lot of eggs were donated to the homeless people's places. So it depends on the quantity that was left out of the unsold eggs that you see people burying. So even if they were dashed to the hospitals, they were dashed to schools, they were still part of the losses because they were not sold at all. So these are what is aggravating the situation of the poultry industry. And we're still appealing to government, still appealing to the central bank, release free what was allocated to the poultry industry, then our people will pay for them immediately. That we then get a situation whereby we'll completely shut down. Not that we are threatening, but the situation and the reality on ground is telling us that if no urgent attention is given, then the birds will start dying. And every other person will lose hope.
All right, Mr. Akpa, please don't lose hope. Don't lose hope. You're an important part of the Nigerian economy, of our nutrition and our health. So please don't lose hope. And we do believe that members of the presidency, they watch this program, and we believe that they will make some move and reach out to you and bring back those allocation before you shut down. Thank you so much, Director General, Poultry Association of Nigeria, Mr. Onalu Akpa, and do take care.
It's a pleasure. Thank you so much.
So there are so many things to talk about in Nigeria at this time. We talk about inflation. We talk about the poultry, as we have seen there. We talk about security, and this after the declaration of the state of emergency on food security by the president. As some people say, well, we have heard that declaration, but what steps does it come with? How is the implementation of it? And all of this will feed into, you know, the numbers that we see in the economy, the GDP, the inflation. We saw inflation jump at 22.7. And it's important to always note, whenever we talk about the inflation numbers, that the NBS itself, apart from the fact that it was lower than economists' expectation, we saw the NBS also come to say that that does not capture the true picture at this time, that it does not capture, you know, the whole impact of removal of subsidy. Well, it is a factor that the MPC, Monetary Policy Committee, will be considering largely. We have seen South Africa rates have been halted because inflation tapered. We have seen it taper in UK, in the United States. We have not seen it taper in Nigeria. Let's talk to Professor Ochiwaleke now, Professor of Finance and Capital Markets at Nasarawa State University, a regular at our Capital Market program, but now on Business Morning. Prof, good morning.
Yeah, good morning, Ini. My pleasure. Thanks for inviting me.
Good to see you here. Good to see you this morning. So, obviously, inflation would be a major consideration for the MPC as they start their meeting on Monday and conclude on Tuesday. But we've seen rate hikes over almost all through last year. But we haven't seen it have effect on inflation. Would it be wise to continue with this hike of rates, especially when the president has even said that he's looking forward to a single-digit interest rate?
Well, yeah, I think you've made the point. The MPC since May last year has been tightening rates. Of course, the MPC is that of the central bank. Central bank has been tightening rates since May last year, but we've not seen the impact of that significantly on price level. Although, if you read the monetary policy communique of May, you would find there that the central bank was making the argument that if they had not done, what they did, or if there have not been a tightening monetary policy, that inflation rate would have been a lot, much higher. I think they cited the case of the May inflation that came in at, or the previous month, April, came in at 22.2%, and said if it's wearing for the policy rate hikes, that particular month, inflation rates would have been higher than 30%. So the central bank is saying that they have evidence that inflation pressure is also coming from the demand side. That is not only the supply side. And therefore, there was the need for them to, to continue on that path. But in my view, I would say that it's time the central bank paused the rate hikes. Although that signal came during the last MPC when it only increased the MPR by 50 basis points. And even in that meeting, one member was actually voting for a 25 basis point. So I think for the month of July, when they meet next week, I should expect that at least they'll maintain the status quo, they will keep the rates. Because the reality, INI, is that financial conditions are already tight. Against that backdrop, it wouldn't be, again, in the interest of the system to say you are, further tightening. You're also increasing the MPR. And remember, it's not just the MPR we are looking at here. The MPR is one, of course, it represents the anchor. But we also have other instruments that they have also been using to further tighten, and one of which is the capital, reserve requirements. The liquidity ratio is also another. And with particular respect to the CRR, if you compare Nigeria's CRR with the CRR in other economies, especially sub-Saharan Africa, what you would find is that the Nigeria CRR is a bit on the high side at 32.5%, which is why I welcome the idea of reducing the CRR with respect to merchant banks by virtually, I think, around 70%, down to 10%. Of course, what that means is that merchant banks will now be in a stronger position to finance, projects, and to also lend to, the real sectors, of the economy. So, by and large, as I said earlier on, there is need to also consider, possibly in this meeting, a further reduction of the CRR for deposits, money banks, to the previous level it was before it was jacked up. In September last year, CRR was 27.5%, and in one fell swoop, the Central Bank of Nigeria, through the MPC, jacked it up by 500 basis points to the current 32.5%. And what that does is that you are, indirectly taxing the banks. You are sterilizing funds because, in effect, CRR is not remunerated by the central bank. Of course, it's a mandatory cash that banks are supposed to provide, keep with the central bank, to act as buffer. But of course, when this ratio is very high, it means that the ability of banks to, lend to the real sector is constrained. And you'll agree with me that in taking decisions, regarding even trying to reduce inflation, there should also be a consideration of output. In the first quarter of 2023, just as we know from the MBS, GDP growth rate, dropped, came down to 2.31%. And I wouldn't be surprised if by the time GDP, the second quarter numbers, come in, we also experience a further decline. So there is need for the central bank to support growth. One way by which they can support growth is to also see how they can ease this, monetary policy. If you look at what is happening across the world now, whether it's the US or Europe or even South Africa, you just mentioned, South Africa kept rates, even when inflation rate in South Africa is around 5% within the South African Reserve Bank's long-run target of 3% and 6% range. So the rates we are still kept at 8.25%. If you go over to the US, in June, of course, the US Federal Reserve also paused, rate hikes, even when, of course, on the back of, a moderating inflation rate. The last time I checked, inflation rate in the US came in at 2.79%. In the UK, there's also, plan to, at least not to be tightening monetary policy at a very aggressive pace. So what I'm saying is that against this backdrop, it would be nice if this MPC considers, leaving the rates as they are, or better still, reducing the As I said, the cash reserve ratio, particularly for
Prof, reducing that rate
commercial
and
banks.
reducing the rate seems like very far-fetched. So let's just maybe pray for, the halt or pause and withholding of it at the rate that it is at this time. But Prof Uche Waleke, Professor of Finance and Capital Market at Nasarawa State, well, one of our usuals here. Thank you so much for your analysis. And we'll see. Monday, Tuesday is almost here. We'll see what the MPC will do. Enjoy your weekend.
Thank you, Ini.
All right, now let's see how the market is doing and how what breath it is holding towards the MPC on Monday and Tuesday.
Positive breath.
All right, if the rates are halted or if it's reduced as the prof is hoping for,
they would see that. I think the market has sort of repriced all these, changes in the inflation, the factors, indices that we consider. So the market is like, you raise the rates, we're here, we're still trading regardless.
That makes it sound like whatever happens doesn't affect us.
No, it does.
But they are supposed to.
In a way. But look at it, we've already looked ahead of it and said, regardless, even if the rates go as high as 30%, who knows? I think the market's already adjusted to say, well, look, we're going to make this gain, we're going to make this profit, and this is
very resilient market.
Very resilient market.
Okay.
And we did see that, a fantastic, impressive half year's earning report from first FBN Holdings,
yes,
declaring
very
profit after tax of 187, billion naira. That's a good one for the banking sector.
And considering all the drama around that.
Yes, and it's on the back of the FX revaluation. So a lot of banking sector is going to be, we're going to be seeing more of that in the earnings reports for the half year.
All right.
So we're going to look at the fixed income market. We did see that market opening on a quiet note yesterday with minimal activity seen in the early hours of trade yesterday, and also at intraday yesterday we saw improved offers on the 2038 and 2053 paper. That's the long end of the paper. That's amid the liquidity squeeze from the bond auction settlement. Now, trades were consummated around the 14.1% and 14.2% handles. Now, for the short end of maturities, we witnessed sustained buy interest on the 2028 maturities, and by the close of trading session, only a handful of trades were consummated. Now, if you look at the Treasury bills market, we did see that low there, very quiet trading, and average yield was unchanged at the end of the day. But we're bringing in Caleb Alimi, he's a chief dealer. Providence Bank, fixed income at Providence Bank, to give us more insights as to what's happening, especially now that market players are trading cautiously. Good morning, Caleb. It's good to have you on the program.
Good morning, Will. Thank you for having me.
Yeah, so we've seen this mention about the 2053 paper at maturity. We've seen that strong interest for it for some days now. We do know yields are attractive at the moment for that long end of the curve, though it's still below inflation. But what are the players involved here?
So the players that actually buy the long end of the curve are largely the pension fund administrators and the insurance companies that have annuity responsibilities. Largely, the PFA. The PFA obligations are long-term. They're for your children and my children, possibly, then the long-term. Thus, the PFAs often buy, those long end of the curve, the longest papers. Also, insurance companies with annuity responsibilities also have to buy such papers to lock in yields. Currently, they still offer the best yields on the market, and given their responsibility, like I said, they have to buy. They're the ones buying those papers.
Okay, so we've seen Forex trading. We have to definitely look at FX because it's what's trending right now. We've seen Forex reserve dropping to its lowest in 2 years now, and the central bank is going to find it very difficult to defend the Naira. Now, we've seen the volatile trading in the I&E window, but the Naira did appreciate by 25 Naira 54 kobo to close at 768 Naira 16 kobo yesterday to against the dollar. And we also know this is due to the CBN's intervention by selling to deposit money banks. How much impact can this have on investor sentiments in the market, and how longer can CBN sustain this intervention?
Wow. Well, it's a supply game, really. If the CBN is able to sustain the interventions, they still remain the largest supplier of dollars to the market. So if they can sustain the interventions, then obviously the rates will moderate. But currently, the market is open to everybody. It's a willing buyer, willing seller, and that's why I was saying that huge volatility. How are investors interpreting it? Investors, like you already noticed on the fixed income space, are being very cautious. But I think the largest impact of the FX liberalization is on the real sector. where the access to dollars is still being greatly challenged, and all of that, all of their inputs really have become more expensive, which they would eventually pass on to the consumers, which eventually leads to inflationary pressures and all of that. So largely for the markets, it's almost like we're just going around in circles, so to say, until there's adequate supply of dollars, into the markets. We think the rates will continue to be very, very volatile.
Thank you so much, Caleb Alimi, Chief Dealer Fixed Income at Providence Bank, for sharing your perspective on the program. We'll look forward to how the market will trade at the end of business today and for next week as well. Thank you so much. So you see that FX supply is the issue, right? It's the elephant in the room.
Yeah, in spite of the CBN's intervention. Yeah, and we do know that there's nowhere in the world where the FX market is allowed to actually just float on its own. It's mostly managed floating, which is what we're having now. We hope for better days, though.
Yes, we do.
All right, now the final stretch is that we head to the crypto space to see how prices are looking there. And one major conversation going on around there. We hope to have Gilbert Jopata tell us now. But let's look at the numbers there and see that the sentiment there is neutral. I guess the market is being pulled one way or the other. It's just at the half now, 50 index points. So let's look at the prices quickly now, since we're almost out of time, and see that Bitcoin is down almost 1%. Lost that. Is that a new resistance point? That 30 or 31, because it went to 31. Is now back to 29,843.29. Ethereum is also negative, lost about 0.6% in 24 hours to 1,893.99. BNB added a stable coin there, telling you that perhaps investors are looking for a place they can hide and hold their breath for a bit. Cardano is also down. XRP, I think, has lost some of its steam after the excitement around that case with a SEC in the United States. So it's down 5% there. I don't know if we have Gilbert Jopata now to join us on the show. Gilbert, are you there?
Yes, I am. Good morning.
Good morning. Good morning to you.
Happy weekend.
Yeah, well, we hope it to be a great and restful one. But, I mean, in the United States now, politics is mixing up with crypto. Robert R. Kennedy Jr. is vowing to back US dollar with Bitcoin if elected. I wonder if the crypto population is strong enough to bring him into office.
Okay, it's a significant development where the world of cryptocurrencies and politics collide. Robert Kennedy Jr. he's a prominent figure and also a political aspirant, making a bold statement as this, if he were to be elected as president, has had a lot of persons talking, and this comes with potential implication for him, retail investors, institutions, and also the economy. But just before maybe we look at the kind of impact, I think it's important we know that the dollar is the world primary reserve currency, while Bitcoin, on the other hand, is the most known cryptocurrency. First, also renowned for its decentralized nature. So Kennedy is proposing to put these financial instruments, and I think it has a more groundbreaking effect than we can anticipate. And this announcement, I think, will actually rally support from the crypto community for Kennedy's presidential bid. It is also a signal that the government sees Bitcoin more as a legitimate form of asset. And this could also lead to more institutional investment in Bitcoin, which could also drive the price up. And Bitcoin's limited supply and its decentralized nature may also be a hedge for the dollar against inflation. But yet, concerns but this could also boost the appeal of the US dollar in the international market, since it is tied to an asset where many persons perceive as. This also comes with its associated risks or downside, which I think should be well considered, which will include increased regulatory clampdown on the market. It could also make it more difficult for retail investors to have an entry into the market. And also the volatility of Bitcoin is also a concern, because this volatility of Bitcoin could also raise question about the stability of the US dollars and its impact. But
a lot of considerations, Gilbert. Sounds like a whole lot to be considered. Doesn't sound like a small deal. Sounds like something you have to have a committee to consider some of this before putting, a whole dollar, which a lot of nations and economies depend on. Well, thank you so much for that analysis, Gilbert Jokpata, financial market analyst. And please have a great weekend.
And you too.
All right, so that's it on the program. Remember, you can always watch Business Morning at any time on our YouTube channel. Another business program, Business Incorporated, for instance, which I'll be back at 1:30 to bring you updates from the world of business. For now, do have a great day, make some money. See you later.